Well, just one suggestion, and this is not an area of expertise for me, but I think Shawn and I so respect and appreciate the way you technically manage these podcasts. One suggestion I have is if you're doing search engine optimization for this episode, you don't use the words anal probe.
Welcome to the Three Wise Men of Divorce, Money, Psych, and Law podcast. Sit down with the California divorce experts, financial divorce consultant Mark Hill, marriage and family therapist Pete Roussos, and attorney Shawn Weber for a frank and casual conversation about divorce, separation, co-parenting, and the difficult decisions real people like you face during these tough times. We know that if you are looking at divorce or separation, it can be scary and overwhelming. With combined experience of over 60 years of divorce and conflict management, we are here for you and look forward to helping by sharing our unique ideas, thoughts, and perspectives on divorce, separation, and co-parenting. Okay, so Mark, you and I were talking offline about a movie with Jack Nicholson and Kathleen Turner. What was it called again?
Pritzi's Honor.
And
I always quote it when it comes to how important is money in divorce.
Okay.
And there's the story of the movie is that Kathleen Turner and Jack Nicholson are both hitmen or hit people for rival mob organizations. And somewhere during the transactions, $1 million, which was a lot of money back in the 80s, probably when this movie was made, has gone missing in a briefcase. And at one point, Jack Nicholson says to Kathleen Turner, no, you don't understand. The Pritzis really love their money. They love their money more than their children, and they really love their children. And that's kind of how money is in divorce, is that, yeah, people love their children, but they also love their money. And so it's a really important piece of the pie. And the question becomes one is, how do you handle that? What's the most appropriate way to do it? And many clients say, well, I've got a CPA and I've got a financial advisor. They can do that for us. My response to that is they don't have the training. And since I was a financial advisor and had my own wealth management firm for many, many years, I know what that role is. And I know it's very different than the role that a financial neutral takes in a divorce case. And the education is different and the knowledge required is totally different. So I would say that in most cases, since this is probably going to be the largest financial transaction of a client's lifetime, it would be prudent to have somebody who's really experienced in doing this work, especially if you're going to mediate it and you are trying to stay out of rival experts in every field.
So last time we talked about why it's important to have an attorney as part of your mediation, which, naturally makes plenty of sense.
Yeah.
I think, attorneys are absolutely essential. I speak as an attorney.
You would, wouldn't you?
But I think, this part two is about why it's important to have a financial specialist as part of your divorce mediation. And I think for a lot of cases, it's every bit as important as the attorney, having the financial specialist involved in your case. Because there are things that, you might not think about if you didn't have the right professional on the case.
Yeah, and very often there's an imbalance of power because there's an imbalance of knowledge around the money.
Right. You said that before. You have the moneyed spouse and the non-moneyed spouse, or
right.
Sometimes I'll call them the financially curious spouse versus the not so curious.
Yeah, and the reality is that in order to be a participant, we, in this process, the concept of informed consent comes up, which means that you could agree to anything in a mediation process as long as you understand what you're doing and what might happen under other circumstances.
I've even had people who are like, well, I don't care about the money. I just care about the children. And then you start talking about the children and meeting their needs. And then you realize that actually they have to care about the money because we got to figure out how to make sure the kids are supported.
So my role is essentially to, first of all, quantify the marital estate and the assets and debts that both people have and the income and expenses that they are going to be dealing with. Once we've quantified it, we do the court forms. Shawn, most lawyers don't go to law school because they love arithmetic.
I certainly did not.
They tend to like words and concepts is what drives people to law school. What we can do is usually more cheaply and candidly more accurately than most attorneys is create the necessary what are called disclosure forms that have to occur at least once in the divorce. So we quantify the estate, we do those forms, and then we evaluate it. We take a look at it and we go, what's going to be challenging here? Has there been commingling of assets that were in existence before marriage? Has there been a long time since the date of separation with contributions, say, for example, going to retirement accounts? Those kind of things that we are aware of that clients perhaps would not think of as important issues, but they can be worth hundreds of thousands of dollars. And then we educate where necessary. Back to what I was saying before about making sure both parties can be participants at the table so that they can have that informed consent. So when they make an agreement, they know what they're doing. And also, Shawn, you and I are often at the table together facilitating this process. So I think of that as the 4-step stages: quantify, evaluate, educate, and facilitate.
Certainly my sense is that most when people go into a divorce process, the professional that they're most likely to encounter first is an attorney. So, Shawn, how do you say more, if you would, about how you talk to people about why it really is in their best interest to have additional professionals to work with, how to bring in a financial specialist, and how do you talk with them about the concerns that they have about the cost of a process and bringing additional professionals in?
Well, I mean, the first thing is, number one, I kind of do a little mini evaluation of my own. If it's something I feel comfortable dealing with, I'll deal with it, and that's a very low bar. It's a very low threshold. Some cases really are that simple. They just have a house and they have a couple of bank accounts and maybe an IRA. Some cases are like that. They're that simple. But there is a level of complexity where it becomes very clear to me that a financial specialist is essential. Not just it would be nice, but it would be essential.
Mark, to you both. So what is that? I'm thinking of people that are thinking about divorce. Can you describe what that threshold is, the specifics of it? What are the things, if you will, the red flags, if you will, that suggest to you they really need to bring a financial specialist in?
For me, I look at, the net worth. I also look at just the complexity of the assets. If they have multiple retirement accounts, not just one or two. Mm-hmm. If they have deferred compensation, if they have RSUs or stock options, if there's a business, all of these things can kind of work together. I mean, do they have multiple stock accounts and multiple positions? Then it quickly gets beyond what I should be helping people with. And if it requires expertise to really understand it, then you should hire the right expert for it. And I always tell my clients when they complain about the cost level, it's the 3 R's. You want to get the right person to do the right work for the right price. So you don't want to pay my attorney rate to analyze someone's stock options. That would be foolish, And the other piece is when there's a disparity in knowledge, that's a really big red flag for me, where I'll want someone like a Mark to come in and help kind of level the playing field between the moneyed spouse and the non-moneyed spouse. And oftentimes you'll have the moneyed spouse say, well, I understand all of this stuff. I handle this. I'm a financial advisor myself. I don't need to hire certified divorce financial analyst to do this, so I could just do it myself. And Mark taught me this years ago. And you say to the person, well, you're at a real disadvantage, aren't you? What do you mean? Well, your spouse wouldn't know a good deal if it bit her in the leg or bit him in the leg, because there's no way they can know. And usually, you'd think that would offend the other person. They're nodding their head. That's right. I wouldn't know.
Yeah. And often the person that is the moneyed spouse will say offline, yeah, I've been trying to get him or her engaged for the last 20 years and that hasn't worked. So they will often admit that. And there's nothing unhealthy about that. There's nothing unhealthy about, when you have a marriage of the division of labor. I mean, it's kind of one of the benefits of being married, frankly. But nobody signs a contract when they get back from the honeymoon and says, you're going to do the yard and I'm going to do the cooking and I'll take care of the kids and you earn the money. But that's how things evolve over time. And so that creates that imbalance of power that I alluded to earlier, that we really need to try to dissipate before you get into substantive conversations and start, deciding what goes where and who gets what.
Yeah. I think that's a big piece of it. And just letting people know that this isn't wasting money. This is saving you money in the long run.
Yeah.
Because, especially when you're talking about larger amounts of money, if, a little swing in your analysis of just a few percentage points could be big money.
Yeah.
And so why take the chance? Go ahead and hire somebody that can be on your team who can help you with that analysis.
And the other thing I'll say is that when a marriage breaks down, I think it's almost universal that there's been a breakdown in trust at some point. And so you may have somebody who's very knowledgeable, who's ready to come in with their spreadsheets and their analysis, and it may be totally kosher and it might be correct in every regard. However, is the other person going to believe it if there has been a breakdown of trust on other issues? I've seen cases where there's been infidelity. And the response is, well, if she lied about that, they must have lied about everything else. So I can't trust them. So having a third party to say, you know what, it is okay, and I can tell you that it's okay, often gives comfort and allows the process to move forward.
I'm thinking of, Mark, in terms of what you're just describing, you're talking about good faith dynamics and something that we've touched on before in the context of mediation or in terms of collaborative process. It really is based foundationally on an expectation of good faith, on an expectation of transparency. And I think that would be just a useful thing for us to really reiterate the absolute importance of that to these processes that we're talking about.
I couldn't agree more. And the flip side of that is it only takes one violation of that in order to destroy the process. And I've seen that happen. It's rare, but, with it's what I used to call the smartest guy in the room. And sometimes it's the smartest gal in the room. But there are people who come into the process thinking they're going to be smarter than all of the professionals in there. And it's my job from a financial standpoint to disavow them of that concept very quickly. Because if someone's coming in thinking they can manipulate the process, I want to terminate that process quickly, or have a come to Jesus meeting and says, hey, you're at risk of that if you don't, if you do this again, sort of thing. And sometimes it's not just somebody providing wrong information. Somebody's dragging their feet can have the same impact. Failing to provide things and dragging it out. Eventually the other spouse goes, to hell with this, I need some teeth. And therefore, I'm going to litigate this, and then you're off to the races, and we're out.
Well, and one of the things I also like about with having a financial specialist is those cases where the parties just don't seem to have time to do their disclosures. And it's been months and months and months, and I can't get them to move forward on doing the mandatory disclosures. At least in California, there's the income expense declaration that's mandatory, and a schedule of assets and debts. They have to provide 2 years of tax returns, statements of material facts and information, and exchange that. And that usually in a mediation ends up being the most annoying part of the process.
Everybody hates filling out forms.
Me included, right?
Yeah, I get it. But if you don't do it, this is what one of my biggest frustrations is. I have 2 clients, right? I have a husband and a wife, okay? And both of those clients have to do a certain amount of work. One of them is very diligent, gets it all done. The other one doesn't. They're busy. They're traveling. They've got stuff going on with the family, whatever. They've got their excuses, and the months go by, and eventually they provide us with everything. However, all the dates on the statements from the other stuff are now aged out. It has to be, 60, 90 days, it's supposed to be on those forms. The statements must be within. So if someone doesn't respond, that can be very disruptive because I've got to charge again to update all the numbers. Not a huge amount, but it's going to have a cost. There's also a time, and then the person that did it in an appropriate and timely fashion is now being penalized and having to do it again, which again can be very disruptive to the process and can really send it off the rails. So you need a financial advisor, folks. If you have now, the only cases really are the ones that are simple, like Shawn, indicated before, where they don't have much in the way of assets. I'll say something else: short-term marriages too. Very short-term marriages, perhaps that were not necessary, and what I call the college divorce. Where you get the dog and I'll take the books and have a nice life, that kind of stuff. That I think is a rarity coming to us because a lot of those people just go pro per and they just take care of it themselves and we don't even see them.
Well, what is it, Mark, about short-term marriage? Well,
in a short-term marriage, if it's short enough, I don't want to step on your shoes, Shawn, but support is not an issue if it's very, very short term. Also, they haven't had perhaps the time to accumulate assets during the marriage that need to be distributed. Mm-hmm. You got a couple of years of marriage. Well, do they care that they've both been contributing to 401ks? Probably not, unless there's a huge disparity. Mm-hmm. If there's not a huge disparity in income, those are very simple cases, But the longer a marriage goes, the more complex it becomes and the more challenging it becomes, because so many times we have cases where one or both of the parties owned real property before the marriage. The houses were sold during the marriage, and then they bought a house together. And so we need to do what's called a Moore Marsden tracing that says how much of the original funds that went into the purchase of that property during marriage came from each one of them, and how do they get credit for that? The longer marriages were their retirement accounts that were brought in that then they continued to contribute to during the marriage for 20 years. And how do we work out what was the premarital share of that? And do they care? But if you can't quantify it, you can't decide if you care or not. Right? I always, almost to the point of being annoying in these cases, I want a number. I mean, once we got a number, then we can talk about it. But often in these cases, it's, well, I deserve this and I should get that. And so. Well, what does that mean? What does this mean? Quantify it, put a number on it. Then we can talk about it and decide if the other side cares,
I was thinking about the objections I receive from clients about, I don't want to pay for a Mark Hill. I don't want to pay for a financial specialist. I don't want to do this. I think that one of the objections would be added cost. They think it costs too much. The other would be that they think it makes it too complex. And the third is they're fearful that when they think of a financial person, they think of forensics, and they think they're going to be undergoing an anal probe now. And I can assure you, Mark does not want to do an anal probe.
I do not. And also, my background is as a financial planner. And financial planners' focus is more on the future. I mean, we got to know where you stand today, but we're not accountants, forensic accountants, who are always looking backwards. We're looking forwards. Now, we can do pretty good tracing in my office, but there have been a couple of occasions during my career where I've actually suggested we hire a forensic accountant to go do the tracing because candidly, I admitted it was beyond my pay grade.
Yeah, like I mean, if you need a business appraisal,
don't do that.
Hire somebody to do specialty work there. But as far as cost is concerned, it goes back to that. It's kind of economies of scale. You're paying the right person to do the right work. So actually, in my opinion, it reduces the fees and gives you a better product. And then when you're talking about complexity, it does not increase the complexity. It actually simplifies.
Yeah.
If you have complexity already, a good financial specialist can take challenging subjects and can reduce it to a form that's digestible so that you can then make decisions, and then it's not overly intrusive. I mean, what would be overly intrusive is if you went to court and then we hired forensic accountants and then there were depositions and people were subpoenaing your employer. And that's intrusive.
And you have two attorneys doing all these numbers and then spending months and thousands
more expensive
of dollars arguing over what the pie is.
But if we could keep it within the mediation context, the financial specialist falls under the mediation confidentiality, which means it's more private, it's more mutual. The information is there, and people can make decisions.
We're talking about the role of the financial specialist in a divorce process, a divorce mediation. I'm curious, Mark, do you also get involved? Is there a role that you have for couples that are looking to marry and are wanting to put together a prenup? Are those ever discussions you get involved in?
Yeah, it's fairly rare. People, quite honestly, they probably have had a divorce before to want to consider it, because people go in with, rose-colored glasses, shall we say, to most relationships, and don't think about it until things turn sour. But if you've been through divorce, or you've had a family member, or your parents went through it, people are much more, or if there's a huge disparity in the wealth, where you have an extremely wealthy person marrying somebody who has less funds, that's not uncommon to have that done. I've had people say, "Oh, I don't want to do that. It would break the romance." Well, yeah, but wouldn't you rather have the conversation when you're getting along than when you're out there, wanting to get vengeance against each other for their perceived crimes during the marriage? I would say yes. But it's a rarity. But when it comes through the door, I can certainly help on it, because, first of all, I can help explain the rules, how this works, and, commingling. When you put your funds in with somebody else's funds, somebody else being your spouse, does that change the character of your property? There's rules around that, and you need to understand them in order to not have surprises down the road. I've had many people say, "Oh, if only I'd known, I wouldn't have done that." So,
and to be clear, the level of disclosure that's required for a prenuptial agreement is the same as what's required for a divorce. So, there's a lot of work that needs to be, and if you don't disclose something, if you get something wrong and somebody relies on that, then the prenuptial agreement could be worthless. So having a financial person help you put the disclosures together is a really good piece of insurance, And then also, I'm sorry, Mark, go ahead.
Well, I was going to say, it sets the relationship off on the right footing. People go into marriages, into relationships with assumptions, which they seldom discuss with the other person. Oh, really? You expect me to work after we get married? Oh, I didn't know that. Or, what? You're going to retire in 3 years? You didn't tell me that. Those kind of things. It's helpful to have those conversations before, when you're getting along.
Mm-hmm.
Well, and I always tell people, you have a prenup already written, whether or not you actually sign one.
Yeah.
If you don't make your own prenup, then you have a prenup that was written in Sacramento by the legislature, or whatever state you're in.
Yeah.
But, thinking about these things beforehand. And I think the thing that happens, and maybe you've seen this, Mark, is when people are thinking about getting married, all they're thinking about is picking out China and where am I registered and what's the wedding going to be like. And they don't want to have to think about these things.
Yes. Yeah.
But they really should. And take the time to do it right. Don't just do a half-butted disclosure. Make sure it's a complete and thorough disclosure. You want to make sure that if you're going to spend the money and time on a prenuptial agreement, that it's something that'll be useful to you.
And enforceable. Yeah.
And enforceable. Yeah.
I mean,
and most times.
And you and I have had these conversations many times about prenups. We've seen the good, the bad, and the indifferent, haven't we? And we've seen ones that, because of change of circumstances, may not be valid. We've seen ones where one of the parties over a 20-year marriage just does incredibly well, has a huge amount of money, and the other one didn't do so well, because of inheritance or because of some separate business interest or something like that. And now there's a real imbalance there. And what's the term? The difference between the income or the unconscionable.
Yeah. So in California, and it may be different in different states, but in California, the conscionability of a spousal support waiver it is determined at the time of enforcement, not at the time of signature. So what I mean by a contract, a defense to a contract is a contract will not be informed if it's determined to be unconscionable. I mean, it's so awful that it shocks the senses. And we've had cases, and in fact, I got one now where when they got married, they had similar incomes. Maybe they had nothing. And then during the marriage, one of them developed a career and the other one became a stay-at-home parent or something like that. And there's a huge disparity in incomes at the time of divorce. It's a very good chance that spousal support obligation will not, or spousal support waiver would not be upheld because it would be determined to be unconscionable by a court. So there's all kinds of things to think about with a prenuptial agreement, and having a financial person there to help is very important. I also think not just prenuptial agreements, but Mark, I've seen you help people that are like, they're not sure they want to get divorced.
Yeah. Marriage matrimony, as I call it.
Yeah, they committed matrimony.
Money and matrimony, as I call it.
Well, yeah. You have a couple, they've committed matrimony, they got married. And they've got money issues. Every couple has a kryptonite, I always say. And for some people, the kryptonite is just the money.
Yeah.
And so, I'll do marital mediation where you actually meet with folks and talk to them about whether there's something here to save. Yeah. And they agree to continue the marriage. And what would that look like? Well, having a financial specialist involved there can be very useful because, number one, you can see what would the case look like if you were to get divorced. What would your finances possibly be? And B, if money is the kryptonite, maybe there's something that a financial planner can do to help you solve that kryptonite problem.
Yeah. And I think you and I had a case a couple of years back where the couple really wanted to stay married, and husband had a very good career, huge stock options. Wife just wanted she was a free spirit. Wife just wanted some money in her name. And they came to us for that, basically to help them negotiate something that would meet both of their needs and keep them married.
And it is a case like that, it sounds like may or may not result in a postnuptial agreement.
I don't know that they ever signed the agreement. We did it for them, and I think they just went to sleep and went away, and they're hopefully living happily ever after.
I think that's what happened, Mark, with that.
Yeah.
Yeah. Yeah, that does happen. Or it could be there's a postnuptial agreement that gets executed, or they actually decide to get divorced, or maybe they don't want to get divorced. They get a legal separation, which is Basically, I always say it's exactly like a divorce, except you're still married.
Yeah. And there may be religious grounds for that. When people just think it's not appropriate to divorce. So
their own morality doesn't allow for the divorce, but they know they need to do something. And sometimes it's just the finances are the issue. Maybe they just have different money styles. He likes to play fast and loose on the stock market, and she's more conservative. We've seen all kinds of stuff like that.
That's in fact very common. It's very rare that, remember, I spent 30 odd years as a financial advisor managing people's money back when I had the wealth management firm. And it's very rare that both of a couple are on the same page in terms of risk profile, frankly. We used to get people to fill out a risk profile and say, in the event the market does this, this is what this account would do, this is what this account would do on the upside and the downside. And it's very rare that they both checked the same box. Usually one is more conservative than the other. And it's not always predictable as to which one it might be, the moneyed spouse or the unmoneyed spouse. It's, Well, money in marriage is a journey, folks. And most people set off almost setting themselves up for failure by failing to talk about it and discuss it, because they don't want conflict. Money is always a problem. I remember mom and dad used to fight about it all the time. I don't want to bring it up. And I get it. I understand that. We all, not all, but most people avoid conflict if possible. And the problem with this is that conflicts in marriage, in my experience, are unavoidable. And therefore, how do you handle them is the issue. And education and understanding the issues make it easier to have a conversation that doesn't go sideways.
Well, there's also this thing that happens in divorce. We like to think that people are rational about their money. We think of the invisible hand of the market moving people towards rational choices. But really, we make our money decisions based on an emotional need most of the time. Wouldn't you agree, Mark?
I once saw a statistic that people spend 3 times as much time deciding which kitchen appliances to buy than they do in making their financial investment decisions. Really. And that was, some Harvard study or something, think about that.
I believe that. I mean, if people were purely rational when it came to buying a car, why would you have all these commercials on about the feelings that you have when you when you buy your vehicle, and so that happens in divorce. People get irrational. They may apply a value to something that isn't appropriate. And because of an emotional need. And so having the financial specialist in there who's just there looking at the math. I mean, there's nothing more neutral than math.
I always say I can't make the numbers do any different, folks. They are what they are.
But that kind of opens the door for our next week's conversation, which is going to be about why it would be important to have a mental health professional involved in your divorce case, because people aren't rational when it comes to making choices, even if we think we are.
Well, I think that there's also still this expectation that I think, Mark, what you were saying about people being conflict avoidant, I agree with that. But there's also this idea that, marriage it just should be this organic process that happens naturally and it'll fall into place.
Right.
And, the way that I talk to people about it is, well, when else in life do the things that are really, really important, when else do they go well if you just leave it all up to chance? How many businesses are successful without a business plan, for example, where roles and responsibilities aren't defined? And then, and money, is one of the big 4 issues that couples have tension and conflict about. So,
what is the 4th? I'm imagining children and sex are 2 of them.
In-laws.
Finances,
parenting
and sex. Yeah.
Or as I call them sometimes, the outlaws.
Yes. Yeah.
Oh, yeah.
Well, guys, we did it again.
Well, just one suggestion, and this is not an area of expertise for me, but I think Shawn and I so respect and appreciate the way you technically manage these podcasts. One suggestion I have is if you're doing search engine optimization for this episode, you don't use the words anal probe.
I'm very glad.
Who knows what will come.
It was my responsibility to do that. We're not going to focus on it. Thank you.
Well,
on that note,
on that happy note, I always want to finish my podcast with the words anal probe. So, Mark.
Yes,
if people did want a financial anal probe,
if people were interested, if people need financial help in their divorce, what should they do?
They should go to my company website. It's Pacific Divorce Management is the name of the company. The website address is pacdivorce.com, PACDIVORCE. There's a lot of information about the company, about what we do, and also a contact form if you'd like to reach out and have a conversation as to how we might help you.
Okay. And Pete, if people need to talk to a mental health professional about their divorce process, what should they do?
So you could reach me through my website, which is peterroussos.com. And this podcast is very focused on the dynamics of divorce. But I think of myself as first and foremost as a couples therapist. And so if people are struggling in their marriage and they would like help with that, please take a look at my website. It'll give you a sense of how I work. And you can contact me from the contact me page on my website.
Okay. And for me, if you need help with the legal aspects of your divorce, or if you have any dispute that you need help with resolving, WeberDisputeResolution.com is the website. That's Weber with one B, like the grill, dispute, like we had a fight, and resolution, like we solved it. WeberDisputeResolution.com. And you can set up for a free 15-minute meet and greet consultation, and we can talk about how we can match you with the right process to resolve whatever dispute you might have. Okay, guys. Well, next time we will talk about how to use a mental health professional as part of your mediation process. Thanks for listening to another episode of the Three Wise Men of Divorce: Money, Psych, and Law. If you like what you heard, be sure to subscribe, leave us a review, and share with others who may be in a similar place. Until next time, stay safe, healthy, and focused on a positive, bright future. This podcast is for informational purposes only. Every family law case is unique, so no legal, financial, or mental health advice is intended during this podcast. If you need help with your specific situation, feel free to schedule a time to speak with one of us for a personal consultation.